Thank you, Mr. Chairman. Thank you for holding this hearing. You know, we should be doing everything we can to help student loan borrowers repay their loans, and part of that is improving loan servicing. But if we want to make sure people can repay their student loan debts, shouldn't we start by doing what we can to reduce the size of their debt loads? Right now, the federal government is collecting loans at 6%, at 8%, at 9%, at 10%, and even higher. So what I'd like to do is I'd like to just ask a question about whether or not you could talk about the impact on people if we refinanced their student loans down to lower rates. And I thought, Mr. Geremia, you might start that.
Thank you, Senator, and thank you, Mr. Chairman. It would be a wonderful opportunity for have the opportunity to refinance my student loan. As I move into my 30s and would like to begin a family and buy a home, I would like to be able to have that opportunity.
Yeah, and you talked about, Mr. Geremia, you said you have a home mortgage, did you say? At what interest rate?
I do not have a home mortgage.
Oh, I'm sorry, I thought you said you had a car loan?
I have a car loan at 1.9%
At 1.9%.
and many car loans are offered at 0%.
Yeah,
And
although we want to be careful about those.
So, yeah. So
read closely.
Yeah. So it would make sense to me that maybe there are more options available to refinance at perhaps a lower rate.
Thank you. Mr. Hubbard, could you speak just a little bit about what the impact would be on people's lives?
Absolutely.
If we brought down the interest rate on student loans?
Thank you for the question, Senator. This is a huge problem right now. If you look at individuals who go into the service with existing debt to begin with, and then they're in the service, they have deployments, they have loss of protections, they're taken advantage of, and they can't even do anything about it. When you're in a combat zone, are you really thinking about your student loans? Probably not. That's a problem. On the back end, as you are potentially going for your education, you're, say, a reservist. You might not have the GI Bill, so you're taking out large loans. You're taking out those loans with very little information at your disposal, and you might have just been coming off active duty where it was very difficult to have access to anyone who even knew anything about getting that right information. So that makes it very complicated. You're not able to buy a house when you come out of your education. You're not able to invest in your retirement. That impact is when the GI Bill, the investment of the GI Bill is completely lost when you're mirrored in student debt. When you see what an individual can do without student debt, when they take advantage of the GI Bill, it's impressive. It really is impressive. You've got 25 to 30-year-olds buying houses for the first time. They're very young. They're investing in the future. And the impact of this is on the larger economy. But I would actually like to point out something that is not often looked at, and that's the issue of security. National security is a big problem with existing debt for veterans and service members. If a service member loses a clearance as a result of their high credit, their high student debts, that is a direct impact to the national security of the United States. So that's something that I think is worth looking at. One thing that is an issue that would be great, refinance would be terrific for service members. Unfortunately, the protections offered by SACRA are lost when a veteran goes to refinance their loans. And that's something that hasn't been addressed.
No, I think it's a very powerful point, and I appreciate it, because what we're talking about here is how the impact of student loan debt on individuals, and also, as you rightly point out, the impact on the larger economy. We've got studies now showing that it's causing people not to be able to buy homes, they're not able to start small businesses, they're not able to start their economic futures and build something strong. This is why more than 30 senators have introduced the Bank on Students Emergency Loan Refinancing Bill. We want to lower interest rates so that more people have a fair shot at getting started in life. I want to pick up on the point you made, though, Mr. Hubbard. You know, in March, the Consumer Financial Protection Bureau put out a report analyzing complaints from veterans about financial products. And the report suggests that private student loan debt collectors may be making misleading or intimidating statements to coerce veterans into paying their debts, including threatening to contact a service member's chain of command or repercussions under the Military Code of Justice for failure to pay. And in March, the GAO released a report raising issues regarding the oversight of contractors who collect on federal student loan debt. Mr. Hubbard, are you concerned that the federal student loan debt collectors are also using military service members' service to pressure them to repay?
It's a great question, Senator. I'm not only concerned, I'm absolutely outraged. This is something that is unacceptable. The Sallie Mae case was a clear signal that this is not something that will be accepted in our society. When an individual goes into service, that is not an opportunity for a servicer to take advantage and abuse those service members because they don't have the right information. If you have an individual who doesn't have access to clear information and then somebody calls them offering what they believe is information, taking advantage of them, that's simply unacceptable.
Well, thank you very much. You know, I remain deeply concerned that debt collectors for the federal student loan program are breaking the rules and misleading borrowers. If a borrower fails to pay a loan, the federal government should be able to collect, but contractors must be following the law and should not take advantage of people. I think this is an issue that deserves very serious attention. Thank you, Mr. Chairman. So we've talked a lot today about how federal investigators have uncovered serious problems with student loan servicers and collectors. Just recently, the GAO raised questions about federal debt collectors that are breaking the rules, and federal regulators have cited Sallie Mae for violating federal laws by overcharging service members on their student loans. Now, when loan servicers break the rules, they push borrowers to do things that are good for the bottom line of the servicer, but not good for the borrower. And ultimately, if students are not able to repay, then it's the taxpayers who will pick up the bill here. Part of the problem, as you've pointed out, is the rules are complex and it makes it hard for borrowers to know what they should expect from their servicers. But I want to ask the question from a little different angle, and that is, when a borrower thinks that something is wrong, thinks that maybe they haven't been told the truth or that someone has broken the law, where do they turn? Where do they go now? Ms. Hoover, how about if I start with you?
Most of the time, the students now are going back to their financial aid office because they are so confused about where else to go. But the tragedy is that sometimes students don't do anything.
Right. Well, fair enough.
But in a small school like mine, we do due diligence and we continue corresponding with our students who are delinquent, so they do come back to us. But again, I'm a small school, and that is not realistic for large schools.
And the further people get out of school, I'm sure the less likely it is they're going back to their old financial aid offices to be able to get any help. So basically what you're telling me is you don't have much of any place to turn, or at least don't know of much of any place to turn.
Until we had the Consumer Bureau Protection Agency, but again, the students are not aware of that, and it's again just the lack of not understanding or where to go.
Yeah. Mr. Hubbard, how about for vets?
Well, I would like to point out one scenario, if I can, Senator. There was a service member cited by the CFPB after they solicited comment on this very particular topic, and this individual went to lower, under SACRA, went to lower their loans to 6%. The servicer looked at their loans. Everything that was below 6% was raised.
Oh.
That 6% did not get lowered. This individual made a call, and in the end, had all of their loans raised as a result. That's a prime example of what happens. This particular issue was found out by the CFPB, which is the primary route for individuals to make that complaint. Since the Consumer Bureau has come out and been soliciting this information, these stories have come out in droves. Yeah. And stories like that, they make me sick.
Yeah, as they very well should. You know, borrowers shouldn't bear the responsibility for keeping servicers in line. Federal contracts should include accountability and oversight protections that require servicers to perform to a high standard. But at the very least, if borrowers have questions or they believe they've been mistreated, it should be clear where they can turn for some kind of relief. I want to ask about one other issue, if I can, And then, as you may know, that Sallie Mae has been touting its status as the federal student loan servicer with the lowest default rates. And in February, I wrote a letter to Sallie Mae asking for data about the company's default prevention strategies. I asked for these data because not all strategies to reduce defaults are going to provide a path to successful repayment, and some may even leave borrowers deeper in debt. Now, Sallie Mae responded to my letter, but cited only a few limited pieces of information about its direct loan portfolio. It did not provide the data needed to evaluate their default prevention program. And as a result, I've asked the Department of Education to provide default prevention data for Sallie Mae and other federal loan servicers. So far, no answer. So I want to try this from another direction. Mr. Hubbard, do you believe that borrowers are getting sound advice from servicers like Sallie Mae about what to do when they get behind on their payments?
Thank you for the question, Senator. Off the bat, the single metric of the lowest default rate is pure nonsense. Just because you have low default rate doesn't mean that individuals are not mirrored in high amounts of debt. If I make a low payment every day for the rest of my life, I won't default, but I will be paying forever. I will never get a house. I will never have the money to start a family. I will never have the money to start a business. I will never be able to put back into the economy what the American economy has given to me. That's a huge problem. In addition to that, just because an individual goes out of their way to find out information doesn't mean on the back end it's not being treated properly. We've found issue after issue with Sallie Mae in particular, with tons of complaints coming to the CFPB. They were the #1 complaint servicer of any servicer by a long shot. Just because they have a low default rate, well, congratulations, but you still have a ton of debt for student veterans who are dealing with that debt, and it's impacting them in their daily lives.
Well, well put, Mr. Hubbard. You know, about a quarter of Sallie Mae's loan portfolio is in deferment or forbearance. And these borrowers are trying to get their heads above water by deferring their payments. But as you point out, the interest continues to accumulate. This is going to add to their debt burden and ultimately may drown them. We need real data to tell us which strategies work as a life preserver and which work as an anchor for borrowers. Also, better data can help drive stronger accountability for Sallie Mae and other loan providers. I hope we continue to push for that. Mr. Chairman, thank you, and thank you all for being here today and sharing your stories. Thank you.